Okay, good morning. Time now a few minutes after 8 o'clock in the morning in Tokyo, June the 4th, Friday, 2021. Welcome to another edition of the World Bank Group morning seminar organized by the World Bank Tokyo office. My name is Koichi Omori. I am Senior External Affairs Officer of the World Bank based in Tokyo. We organize a series of online seminars starting at 8 o'clock in the morning in Japan Standard Time, introducing the latest report presented by the World Bank Group economists and specialists. This morning, we are featuring a new report titled Long Shadow of Informality, Challenges and Policies, which was released on May 11th, about 1 month ago. We have a pleasure of having two World Bank economists connecting from Washington. First, the Franziska Onezoge, the manager of the Prospect Group. Good morning, Franziska. How are you? Or good evening to you.
Good evening. Good morning.
Great. We had you featured in our the morning seminars. I think 2 years ago, not last year. I thought that was the last year, but that was 2019. You talked about the JEP 2019 January edition in our morning seminar, and the 2018 November you came to Tokyo to present the inflation report. In a face-to-face format to the Japanese audience. We hope the days will come back soon, so we can have opportunity of featuring you in person again in Tokyo sometime in the future. All right. Then we have a Shu Yu, the senior economist, also in the Prospect Group. Good morning, good evening to you, Shu. How are you?
Good morning and good evening to the audience and to Koichi, right?
Thank you very much. Thank you very much. This is your first appearance in the morning seminar. We hope to have future opportunities to future your presentation in the morning seminar series. Okay, Franziska and Shu are the co-authors of the Long Shadow of the Informality report. We'll listen to them presenting the main points in the next 30, 40 minutes. After their presentation, I'll read questions from our viewers. If you did not have opportunities to send your question in advance, please send them using online form posted on the announcement page of the seminar, or you can just post your question on the chat section of the YouTube screen. I'll read them and ask Franziska and Shu to respond after their presentation. So with that, I'd like to ask Franziska and Shu to come in to start your presentation. Over to you.
Thank you. Thank you very much for making this event possible. It's such a pleasure to be here with you. Well, tonight, tomorrow morning, the world has shrunk, hasn't it? So it's a pleasure to present our new study, The Long Shadow of Informality, Challenges in Policy with you. As many of you know, informality is a first-order challenge for many emerging markets and developing economies. You might ask, why are we looking at this now? We're looking at this now because there's a real risk that widespread informality in some of the poorest countries of the world will hold back the recovery from last year's deep recession. So Shu and I will structure today's presentation around 4 questions. First, what is informality? That's a big question. We'll keep it short though. Second, how could informality hold back the recovery from the pandemic? And third, beyond that very near-term recovery, what are the broader development challenges associated with informality? And we will end with the menu of policy options. So many studies have been written about informality, and ours aims deliberately to be comprehensive, to bring together this vast literature into a one-stop shop where you can find the literature review and some new results, some new findings. So in this large literature, everyone seems to think of something slightly different when they talk about informality. And there seem to be, in a nutshell, two streams of thought in this literature. Why workers on firms participate in the informal sector. Some join the informal sector out of necessity. That's especially the case for low-skilled workers, often in agriculture, who simply cannot be productive in the formal sector. Their incomes would fall below subsistence. Informality is very common in the lowest income countries, especially in Africa. It's very common. And then there's the other type of informality, where workers or firms voluntarily choose the informal sector over the formal sector to avoid regulations or for its flexibility. This is much more common in middle-income countries. This is the kind of informality that is much more common in Latin America and Caribbean, or in Europe and Central Asia. And you can see that studies that focus on these two regions have very different emphasis. So because of these many different reasons of informal activity, there are also many different definitions of informal activity. For the purposes of our study, we define informality as those market-based activities that are hidden from authorities, but that are legal. So in other words, they should be counted in the economy's GDP, but they're not currently included. So the smallhold farmer who sells the vegetables on the market, the street vendor, the hired babysitter, not the sibling, the hired babysitter, the moonlighting plumber, all of them participate in the informal sector. The drug lord does not, because informal activities discussed here do not include criminal activities. So this is the theory, conceptually, who is informal. In practice, it's difficult to measure informality precisely, partly because the data is simply not available, and partly because informality, what is informal, depends on local regulations. And I'll give you an example in a minute. But first, to come to the data availability, almost by construction, almost by definition, is very difficult to measure informality precisely. So one of the most commonly used proxies for informal employment is self-employment. Now, self-employment includes workers you traditionally think of as being informal, the street vendor, for example. But it also includes some formal professionals. So it is an imperfect proxy, but it's widely used simply because the data is actually available. And we go into the data in the next slide a little bit more. To illustrate, but then to the second point, the role of regulations in the definition of informality. Consider the case of gig workers. Now, in some countries, gig workers are self-employed. But in other countries, they are formal employees of Uber, Lyft, whichever gig platform it is. So the definition of informality really depends on the local laws and regulations. In some countries, being self-employed, we would count them as informal. In other countries where they're formal employees, we would count them as formal. And there's really no way of having a clear, consistent definition across countries, because every country has different regulations. So because the informal economy is so hard to measure, the literature has come up with a wide range of measures. And we have collected them all. And maybe all is too much, but we have collected the 12 that are most widely used. So the 12 most commonly used measures have been compiled into the first ever, to our knowledge, comprehensive database of all standard measures of informality for up to 196 countries for as long as 1990 to 2018, so almost 3 decades. And they can be grouped into two types of measures. There are the model-based measures and the survey-based measures. The model-based measures are usually used to estimate output, your GDP, the equivalent of informal GDP. And survey-based measures are usually used to measure employment or perceptions. Now, all these measures have their limitations and their advantages, but the output-based, the model-based measures, their advantage is that they're very nice, rich economic reasoning. So you know why, you can trace why informality is moving. They have very rich country and year coverage because they're generated from other series with good data coverage. So you can actually do time series analysis. And they also capture the intensity of employment or work intensity, which some of these survey-based measures don't. But they depend on modeling assumptions. So if the modeling assumptions are wrong, you get biased estimates. So that is one disadvantage of these model-based measures, usually for output. Now, survey-based measures, of course, have the advantage that they don't depend on modeling assumptions, they're just surveys. But the difficulty with those is, for most of these, they're periodic. They're not every year, and not for every country every year. So it's very difficult to put together a time series for this of these survey data. Self-employment is perhaps the one exception, which is really available for a broad number of countries. on an annual basis. So you can actually do some time series and time data analysis, some empirical econometric analysis. Now, broadly speaking, we show in our chapter 2 that these measures cover 3 aspects of informality, and they're actually distinct. There's output informality, there's employment informality, and then there are perceptions. And with distinct, I mean that these measures that are within a category correlate more with each other than they correlate with measures in other categories. There's a very clear difference. Output measures tend to correlate together. The employment measures tend to correlate, but not necessarily across output and employment. And our perceived informality is something that doesn't correlate much with anything at all over time because it's remarkably stable. Once a country is perceived to be highly informal, it's perceived to be highly informal for a long time. It's very difficult to change. Now, in today's presentation, I'll just focus on 2 measures. The output measure is our dynamic general equilibrium measure, and the share of self-employment, simply because they have the best data coverage. And this is what global informality looks like. So depending on your measure of informality, of output informality, informal output, informal GDP accounts for somewhere between 1/4 and 1/3 of official GDP. That's large. It's around 1/3 of global GDP is produced in the informal sector. Self-employment, the most commonly used proxy of informality, also accounts for about 1/3 of total employment. So this is a large share of global employment. Now, for EMDEs, we also have data on the broader concept of informal employment. And there it's almost 70%, the share of informal employed. 2/5 of the global labor force are not covered by pension insurance. And if you ask the world's firms, as we do here, about half of them complain about facing competition from the informal sector. These are large numbers. This is macro relevant, as we would say. Now, it's not like just because the literature has focused on Africa and Latin America, it's not at all that informality is only in these regions. Informality is a very wide-ranging, very broad-based concept. It's common in all EMDE regions. The least perhaps in MENA because they have a lot of the oil producers, but it's really everywhere. Informality is everywhere. Now but it's different types of informality. As you can see here, the share of informal output is highest in Sub-Saharan Africa, Europe and Central Asia, and Latin America and the Caribbean, the blue bars. But the share of self-employment here, our proxy of informal employment, is highest in Sub-Saharan Africa and Asia, the 2 Asias, South Asia and East Asia by our estimate. Now, there is an interesting story in that differential between the blue bars and the red bars in the left chart. It gives you an idea of the relative labor productivity in the informal sector compared to the formal sector. And it's especially low. The gaps are particularly large here in SSA, Sub-Saharan Africa, South Asia, and East Asia and Pacific. In Latin America and Caribbean and the Middle East and North Africa, productivity is roughly similar in the informal and the formal sectors. Now in ECA, there's something odd going on in the sense that the informal economy appears almost more productive than the formal economy. And that may reflect the fact that people move in and out of informality as a matter of choice, not necessity. Now, the other thing that has to be acknowledged is that informality has fallen over the past 3 decades. You see it here in all the EMDE regions, how it has changed since 1990. Clearly in all EMDE regions, informality has receded. It has fallen most in those regions that had the fastest GDP growth. That's essentially Asia, East Asia and South Asia. And it's fallen least, but there was weak growth and entrenched weak governance. So it's fallen least here in the MENA region, in Middle East and North Africa. So the bottom line here is informality is macro relevant. It's a large part of economic activity in emerging markets and developing economies. And it's a particular problem at the current juncture because it now threatens to hold back the recovery from last year's record deep recession. And our concerns here are based on 3 considerations. First, the informal economy has been particularly hard hit by the pandemic, just because of what it is, its features. Second, macroeconomic policies struggle to gain traction in highly informal economies. And third, historical precedent suggests that informal economies dampen recoveries. Now, to illustrate the first point, these lockdowns that had closed most of services activity in many countries last year, they hit informal firms particularly hard, simply because they're so heavily represented in the services sector. 3/4 of firms in EMDE services sectors are informal. That compares with about 1/3 in the manufacturing sector. And if these lockdowns then prevent economic activity and income earning, that's an income shock that few informal workers can weather. These workers have essentially no access to social security programs. Unemployment benefits cover only about 4% of the population in emerging markets and developing economies with above median informality. And these workers also have very limited savings to fall back on. For example, two-fifths, almost half of the population in emerging markets and developing economies with above median informality, 2/5 would be driven into poverty if they had to cover direct out-of-pocket payments for an unexpected healthcare emergency, such as, for example, a COVID-19 hospitalization. So it's hit the pandemic has hit the informal economy particularly hard, and informal workers particularly hard. Now, governments have tried to put in place a lot of macroeconomic support to buffer the effect, but the problem is that these macroeconomic stimulus measures have very little traction in countries that have a lot of informality. So take, for example, fiscal stimulus. As it turns out, fiscal stimulus packages are smaller, significantly smaller, in countries that have high informality than those that have low informality. And in part, that's no surprise, simply because they have smaller revenue envelopes. On average, government revenues in EMDEs with above median informality have between 5 and 12 percentage points of GDP lower revenues than countries with low informality, other emerging markets, developing economies. And something similar holds for monetary policy. Take monetary stimulus. That usually works through the formal financial system. When informality is widespread, these formal financial systems are very shallow. So monetary stimulus doesn't gain much traction. So for example, in those countries, those emerging markets and developing economies that have above median informalities, only 20% of firms can actually access banks to finance investment. That's only 2/3 of the level in other countries, in other EMDEs. And finally, perhaps the most important reason to be concerned about the recovery is simply the historical record. Unless, of course, this time is different. But historically, activity in the informal economy has dampened downturns and held back recoveries. And this is one of the innovative findings of this book. We quantify the impact of business cycles in the formal economy on the informal economy. There's always this question of causality, perhaps we're running the other way, but in this particular estimation, we use an instrumental variable estimation, where we instrument formal economy output swings with trade and government spending. And that allows us to distill the causal effect of formal business cycles on the informal economy. And we find that formal business cycles move the informal economy in the same directions. So these are positive coefficient estimates, but in a more muted manner. So especially we find that a 1% increase in formal economy output raises informal economy output less than proportionately, somewhere between 0.4 and 0.8%. So that's for output. Informal employment doesn't move. Informal employment does not move at all, at least not significantly. And this muted response of the informal economy to formal economy business cycle swings, that is a blessing during recessions. And that has been pointed out in parts of the literature on Latin America and the Caribbean, because the informal economy can dampen recessions. But in recoveries, this blessing turns into a curse, because it also holds back the recoveries. And there's a real concern now that this curse may come to pass yet again, and large informal sectors can hold back the recovery once again. But this was the short term. Let me hand over to Shu now.
Francisca, can you see the slides now?
No, we can't see the slides. Shall I use mine?
Yeah, let me try again. And then if it doesn't work, then let's use yours. Sorry about that.
Now we can see.
Sorry about that. Okay, so Francisca just talked about how the informal sector could hold back the current recovery from last year's recession. However, development challenges associated with informality can go beyond those short-term considerations, and it were present in developing countries even before the COVID-19 hit the global economy. So at a macro level, informality is associated with general lack of development, both in economic terms and also in terms of institutions. So here we show a couple of indicators. EMDs with above median informality, which is highlighted as high informality here, tend to have poor GDP per capita. They are still largely rural and have a higher rate of extreme poverty headcount. They are also more likely to be associated with poor governance, especially lack control of corruption. When we are focusing on human development indicators, countries with above median informality also perform poor in terms of those indicators. EMDs with above median output informality is associated with a lower level of human capital. This limits their ability to staff and create more skilled jobs. And at the same time, it is also associated with more gender inequality. The indicator here show that female years of schooling as a share of male schooling is about 80% in countries with above median informality. And also the ILO report show that female workers are more likely to be self-employed than male workers in developing countries. And more importantly, it is also associated with a lower level of life expectancy at birth. As you can see from the bar chart here, countries with above median output informality has 6 years less life expectancy at birth than those with below median informality. Access to public infrastructure is also more limited when the level of informality is high. And this creates a problem for country because it can dampen the probability of productivity growth in those countries. And it also fills in a vicious circle where the taxpayers feel like they are reluctant to pay for subpar public services. Here are two examples. As you can see from the bar chart on the left, countries with above median informality have less paved roads than countries with below median informality. And similar situation when it comes to access to electricity. Almost all population in countries with below median informality have access to electricity. However, the rate is 70% in countries with above median informality. Electricity is a very important production input, especially in the manufacturing industry. So the lack of access to public infrastructure and human capital also contributed to the lower wage and lower productivity in the informal sector. At a workers' level, it could translate into lower wages. Past studies have already recorded that formal sector workers tend to be paid more than their informal sector counterparts, and they call this a formal sector wage premium. What we did in this report is that we collected all the studies that is estimating this wage premium, and we put it into a quantitative literature review, which is, in other words, a meta-analysis. What we find is that on average, formal workers are paid 90% less than their formal counterparts. What is more interesting is the reason for such a wage gap. So this wage gap actually represents the differences in worker characteristics between the two sectors. Informal workers tend to be less educated and inexperienced. When the studies are controlling for these worker characteristics, we can see that this wage gap becomes insignificant and disappeared. At the firm level, we also see a quite similar story. Informal firms has been recorded by a lot of past studies to be less productive than their formal counterparts. Here we use the World Bank Enterprise Survey, which to our knowledge has the best coverage of firms and countries in terms of data. And using that data, we find that informal firms' productivity is about a quarter of their formal counterparts. And when we are controlling a range of very important firm characteristics, this gap, which is 80% here, without any control, shrinks to 75%. What are these characteristics? So country fixed effects are included when we are estimating this gap. It also represents something that is very associated with firm productivity. For instance, the size of the firm, which industry it is in, whether it is managed by an experienced manager, and whether it is located in a traffic convenient location, for instance, the capital. And all these contribute to the gap of the formal and informal sector. So the lack of human development and access to public infrastructure could be due to the weaker fiscal conditions in countries with more pervasive informality. As we talked before, informality could erode tax base and limits the government's ability to implement countercyclical policies, serve debt, and provide public services. And as you can see here, that government revenues in countries with above median informality would be 5 to 12 percentage points lower than those with below median informality. However, this is not only the story about the level of government revenue, it is also a story about the composition of government revenues. When we look at the income tax and import tax, we can see that countries with above median informality rely more on the trade tax and less on the income tax, which makes the whole tax system less progressive and hence less redistributive. The lack of government revenue also put a limit on the government ability to spend. Therefore, we also find that government expenditures are significantly lower in countries with above median informality by about 5 to 10 percentage points. And here there's also another story about the composition. When we look at government expenditure by functions, which are government spending on education and health, we find government spending on these two functions are significantly less in countries with above median informality. And this kind of composition shifts could also contribute to the poor performance in human development in those countries with above median informality. So we have highlighted all the development challenges associated with informality. What can policymakers do to address those challenges? To answer this question, the first thing we need to understand is what are the underlying specific reasons for informality in each country. The reason really differs across countries. And is it really driven by necessity? Are people not equipped with the right education and skills to join the formal sector? Are firms not accessing the very needed resources to be able to boost their productivity to join the formal sector? Or is there any unreasonable regulations in place that is preventing them from joining the formal sector? Without understanding the specific reasons, we cannot really give a specific solution to the problem. So policymakers need to understand the underlying reasons for the specific informality in a country in order to give a solution. During the past decade, EMDs have already improved a lot on the policy end. As you can see here, there's a range of policy reforms implemented during the past decade. So so when you're thinking about the choice of joining the formal sector, it's really about doing a calculation about the costs and the benefits of joining the formal sector. Joining the formal sector provide you with better access to public services. It is easier for those firms to get credit But at the same time, it also put more compliance costs and tax burdens on those firms. So when you're looking at the reform listed here, is that during the past decade, on average, EMD implemented about 16 reforms. Half of them are expected to have an impact on informality. These ranges from the ease of paying taxes all the way to reducing startup costs. And what we did in the 2019 January JAB is that we reviewed past studies on the impact of reforms, various reforms on output informality or employment informality. And we'll group these reforms into 3 categories, as you can see here from the right panel: the tax-related reforms, regulatory-related reforms, and trade liberalization. In general, what we find is that reducing tax burdens and removing exit and entry barriers to the formal sector, and also making the labor market more flexible, are associated with declines in informality. However, trade liberalization sometimes can be followed by increase in informality, especially in the short run and when it is not accompanied by labor market reforms. To give you an example, Colombia in the late 1980s and the 1990s conducted a series of comprehensive trade liberalization, where they find that the reduction in tariff actually was followed by a higher probability of informal employment. And this effect lasted until the labor reform was carried out to remove to increase the labor market flexibility. So the point here is that the trade liberalization had an unintended consequences on informality, which the policymakers need to be more vigilant about. So what we did in this report is that we carried out, actually in the chapter 6 of the report, we carried out a systematic review of all policies that were theoretically or identified by the literature to be associated with informality. It ranges from tax policy all the way to different kind of government training programs. So after identifying those policies, we also did some regression analysis to see the cumulative changes in informality following these various type of reforms. And here we are going to give you a couple of examples. One example would be about improvement in control of corruption. We have already suggested in the previous slide, a couple of previous slides, that poor governance could be one driver for informality. So in the past decade, about 1/3 of EMDs improved their control of corruption. And this kind of improvement is also followed by reduction in output informality, which is shown here. It is estimated that the cumulative change in output informality following a 1-point improvement in control of corruption could be about 0.1 percentage points of GDP in the following over the following 5 years. Another example would be about financial development. We have already mentioned that informal firms are largely credit constrained, which prevent them from making productivity enhancing investment. By providing better access to finance could be followed by declines in informality. So one thing we see is that access to finance indeed is poor in countries with above median informality. Domestic credit to the private sector is only about 30% in countries with above median informality, which is about 20 percentage points of GDP lower in countries with below median informality. If those countries are able to close this gap, which means a 20 percentage points of GDP increase in domestic credit to the private sector, such an improvement could be followed by also a 0.1 percentage points of GDP decline in output informality over the next 5 years. All these 2 examples we showed in the slides suggest that policy improvement are followed by declines in output informality. They are statistically significant, however, economically small in size. This suggested that each policy alone is not enough to curb the challenges posed by informality. What countries need could be a package of comprehensive policies that tackle informality from different angles, from fiscal, regulatory, or even policy, labor and trade policies. And also, as we mentioned before, some policies could have unintended consequences. So the policymakers need to be very vigilant when they are designing these policy packages. And to reiterate here again that countries could have specific reasons for its underlying informality. It could be lack of development or heavy-handed regulations. So the policies need to be tailored to those underlying drivers and country-specific circumstances. Lastly, we would like to emphasize that short-term policy changes are not going to yield long-term solutions, especially when it comes to informality. Because in general, informality is a deep structural problem. There's no short-term solution for such problems. And policymakers can do the following to help to reach the long-term development outcomes. They can foster growth by improving access to finance and improving firms' productivity. They can equip the workers with better education and skills by improving their access to education services and training programs to move to the formal sector. They can also try to reduce the compliance cost of moving to the formal sector by streamlining the regulation, make the regulatory framework more reasonable, and also to support to level the playing field for all workers and firms, both formal sector and informal sector. So now I would like to give a brief summary of the 4 questions we're covering in this presentation. And basically, we described who are the participants of the formal sector. These are workers and firms that are less productive, and they tend to concentrate in labor-intensive sectors. And we suspect there is a possibility that informality can hold back the recovery from the pandemic, because those countries with more pervasive informality tend to have less macroeconomic stimulus, and even if they have the stimulus, they tend to be less effective. And the informal economy tend to have a muted response to formal economic expansion, which could also hold back the recovery. Beyond those short-term considerations, informality is associated with a range of long-term development challenges, ranging from poverty all the way to low wages and productivity. Lastly, we provide a manual of policy options for policymakers to address the challenge posed by informality. We want to emphasize the importance to have a comprehensive policy package that is aimed at long-term development outcomes and tailored to country-specific circumstances. We would like to thank you all for listening to our seminar, and we welcome you to visit our website, www.worldbank.org/informal economy. The full report is hosted on the website with all the charts and Excel sheets, and we also put the data set on there for people to download. We also have some podcasts and blogs associated with the book. And now we are looking forward to the question and the Q&A section.
Thank you very much, Franziska and Shu, to present the main point of the report. We received some questions in advance and also received another set of questions during your presentation. So let me read those questions and ask you to respond. First, the question that we received in advance from Sasaki-san, thank you very much for your question. According to a recent World Bank analysis, migration and development, remittances flows to low and middle income countries remain strong even in the current pandemic situation. Would you please comment on how the report analyzes the correlation between the informality and the current status of remittances, particularly how would it affect on the remittance if the informality is going to be improved? Just to add, actually, we featured the migration and development brief last week in our morning seminar. So probably the questioner, Sasaki-san, was inspired by the last week's session. So I would like to ask Franziska and Shu to come in to respond on this question. Thank you.
start on this one. This is an issue that is perhaps most important for the ECA region, Europe and Central Asia. That's one of the most remittance-reliant regions all over Central Asia, but also in a lot of Southeastern Europe. These countries rely heavily on remittances. And the interesting thing is here that some World Bank researchers, some other researchers found that larger remittances at the household level are associated with a greater probability of informal employment. So what seems to be happening is that remittances make it possible for people to be a bit less risk averse, a bit more risk loving or willing to take risks and move into the informal sector without the safety net that people have in the formal sector. So what that means for this particular recovery, I suspect that the 2020 recession was so deep. It's the deepest recession since the Second World War. The remittances patched so many holes. I'm not sure we will see the strongest effect on informal activity or employment. It probably just allowed people to continue consuming. But what is there is that these years of remittance streams, reliable remittance stream, that can encourage greater informality because it can encourage a bit more risk-taking.
Okay, thank you very much. The second question from Ueda-san from JICA. Thank you very much for your question. Would the digitalization of the government services, e-government, reduce the informal sector or informal economy? So this is a question from Ueda-san. I would like to ask Franziska and Shu to come in.
So thank you very much for the question. So digitalization actually would be very kind of, in a book we say it could be an opportunity for government to solve informality. So if the digitalization, digital government, is used to reduce regulatory costs, so to make this for firms to get registered more easily, like the simple program where you have a one-stop shop, you can do all the registration online at once and reduce that cost, and also reduce the tax payment cost. Of course, in that way, we suspect it could have an impact on informality, and it could actually follow by declines in informality. Of course, it will be done in a kind of nice way that it really affects the costs of joining the formal sector. It really reduced the cost of joining the formal sector.
Thank you very much for your response. The third question from Mori-san, we received in advance. Thank you very much. It is mentioned, sorry, not this one, this one. Improving the informality would require major changes in many cases because of the informality is socially, culturally embedded in functioning of the whole society for a long time, particularly in developing countries. Using the current instruments to support the developing countries, where should the World Bank start with? So how about this question?
This is an excellent question. I think it goes to the root of the policy implications of our study. In some sense, what our study shows is that informality is yet another symptom of underdevelopment. So there's really no silver bullet. There's really nothing that a single program can do, a silver bullet. It needs a whole package of reforms. It needs years of development. And with the development, the underlying reasons of informality can also recede, fade gradually. It's not an accident that the countries that have grown fastest in East Asia and South Asia are the ones where informality has fallen the most, simply because they have the big opportunities in the formal sector. And these countries, these people were also able to seize the opportunities. They had the human capital, they had the access to markets, the infrastructure to achieve it. So in some sense, anything that is targeted at broad-based development, exactly what the World Bank has been doing for decades, will help lower informality as one of the outcomes of the broader development process.
Thank you very much for your responses. The next question we received from the anonymous participant. Thank you very much for sending questions always. question is this. It is mentioned that the analysis related to working hours in informal sector is one of the future points to think about. Workers may adjust or improve this in this regard, but sometimes the same person who works in the formal sector may also work in the informal sector for the sake of securing his or her own safety net. At the present, what is your estimation with regards to working hours and other background of informality?
So this is exactly the way to reconcile the regression results. Remember, I showed you the slide where the output response was positive, just less than 1, and the employment response was nil, essentially all insignificant. That's the way to reconcile the two. That in the informal sector doesn't adjust necessarily in employment status, that people move in and out of employment. That's very difficult to do. What it doesn't adjust with is adjustment of hours, adjustment of wages. It's just much more flexible. So you'll have wage adjustment and hours adjustments, and that will give you then the activity, the output, the GDP adjustment, even if there's no adjustment in employment status. So this is exactly the way these two results can be made sense of together in juxtaposition.
And may I add one line here? So we don't really have a comprehensive database on how they adjusting working hours and wages. So what we find is that in other studies where they do labor surveys, they do find that in those times, people, especially the informal workers, adjust in terms of their working hours and wages.
Okay, thank you very much for your responses. The question that we received from Professor Yoshino of Keio University, thank you very much for your question. Thank you for the excellent presentation. Informal sector is difficult to get data to collect tax. However, digital technology might overcome those difficulties. Satellite photo can tell how many people are using small restaurant every day, how many trucks come to pick up crops in the fall, which can estimate the level of production by farmers. I hope the World Bank can use satellite photos and mobile phones data to measure activities of informal sector in future. Any comment, please?
So that's actually that's something that is already happening, not really at the World Bank, but at academia. That they are using the satellite image to track informal activities. I think in one Eastern Asia country there was one study using the satellite image to estimate informality. Why it cannot be currently widely used across the globe, there is actually a data limitation. It is similar towards the method used in 1990 when people are using electricity, like excessive use of electricity, to try to capture informal output. However, when you are trying to do these kind of estimates, which is similar towards the satellite image story, that you need to come up with a baseline estimates in order to create those kind of theories. So when you are doing the satellite image, for us, it's sometimes quite difficult in the very beginning to have a reliable baseline estimates. That's why in the book we also write, especially chapter 2, when we discuss various measures and how the limitations and advantages. We say it is actually very important to think about to use two types of methods. One is the model-based and the other one is survey-based. So the survey-based could guide the model-based to be more precise when they are estimating the time series. So this is something we would like to look into, and I think some people have already made a move towards that. And we would maybe in the future incorporate and improve our current measures, taking the satellite image approach.
Thank you very much for your response. We received the a question from Ida-san from JICA Africa Department, posted on the chat screen of the YouTube screen. Thank you very much. You talked about the market liberalization policies as part of solutions, but some regulations such as the minimum wage needs to be reinforced or not. So that was a question. If you have any responses, please. Thank you.
Yeah, that's exactly the problem. So regulations have always two sides. It's a question of the benefits and the cost of being in the informal economy. So the benefit of being in the informal economy is that you avoid burdensome regulations, and the cost is that you get caught. That's the enforcement part of it. So by streamlining regulations, to something that is less burdensome, something that is reasonable, you can increase or lower the benefits of being informal, increase the benefits of being formal. And that really depends. Minimum wage, there are minimum wages and minimum wages. No, it depends on how large minimum wage is compared to the average wage or median wage or some other measure. So, for example, the types of measures that are in place in a lot of emerging markets and developing economies are very similar to the other types of measures in advanced economies. They're just much more burdensome. So you have to submit the documentation twice, electronically as well as on paper. You have to, it just takes much longer to submit. There are many more pages to documents. So that's what we mean with burdensome, that some regulations can simply be streamlined and made just less burdensome. So it takes less time and less effort to comply with these regulations. So that would then reduce the incentives to become informal because it's just too burdensome. On the other hand, the other part of that coin is very much the enforcement. It's not enough to just streamline regulations. It's also the second step always has to be to enforce whatever regulations are in place when the regulations are not overly burdensome. To add a bit of cost to being in the informal sector. So it's a difficult balancing act, and it's sometimes that was one of the reasons for some of these unintended consequences in some of these policy experiments. For example, in one country, I think it was Pakistan, they had decentralized the wage setting process. And what happened with the decentralization, also the enforcement became became a bit laxer. And then you got an increase in informality. That was one of the policy experiments we actually described in our earlier work.
Thank you very much. Franziska Xu, you answered all questions we received in a very efficient manner. So before wrapping up a seminar, I'd like to ask, I'd like to invite Franziska and Xu to give us a very final remarks to the stakeholders in Japan, and then we wrap up a seminar. Okay, Xu, please.
So although Franziska mentioned that this report has been written during the past 5 years, we still think that this is an ongoing project. So what we have so this is quite interesting that we actually started the research thinking about writing maybe 2 papers and 1 chapter. And then after 1 chapter, we feel like, okay, now we get all these questions from different organizations, people asking you different questions. What are the short-term consequences? What are the long-term? What kind of measures can be improved? What are the limitations? All that. And then it developed into this book, which will also feature a comprehensive database that covers 12 the mostly commonly used measures and up to 196 countries over the period 1990 to 2018. And during this round, we also get a lot of fantastic stories, questions, especially about the impact of digitalization right after the pandemic. So what we feel like is that we will take those questions and digest them. And I feel like maybe in 2 years or 5 years, we come up with another round of these data and with much better improved proxies and better answers to your questions today.
Let me just add, yes, we should repeat this study. Maybe this time is different. Maybe this time informality will not hold back the recovery simply because there's a big structural break because of all the move to digital. So this project has been a long time in the making and has covered much more ground than we ever thought we expected, we ever thought it would. It remains a large part of our work now going forward. So I'm particularly grateful to you for having organized this seminar. It's a pleasure to discuss these issues with you today. Thank you, Koichi.
Thank you very much. With us this morning, connecting from Washington, we had Franziska Onezorge, the manager of the Prospect Group, and Xu Yu, senior economist in the Prospect Group. Thank you very much, both of you. Really appreciate it.
Thank you very much.
Have a good day. Thank you.
Great, thank you. Okay, so next week we are featuring a new report titled "The Distributional Impact of Trade: Empirical Innovations, Analytical Tools, and Policy Responses." Our future speaker next week will be co-author of the report, Gladys Lopez Acevedo, a lead economist and global lead in poverty, and Maria Fesca, the senior economist in the trade and regional integration unit. This is going to start at 8 a.m. on the Friday, June 11th in Japan Standard Time. With that, I would like to once again thank you everyone for watching the seminar. Stay safe, stay healthy, and see you next week. Thank you very much.